Entrepreneurship isn't all about the money, but it sure is a good feeling to see that paycheck come in. So how do you make sure that one, you actually get paid, and two, you pay yourself legally? Part of the reason why you start a business is to make money for yourself. And to do that, you do have to know actually how to pay yourself. So in this episode of the Legal Paige Podcast, we are going to take you back to the basics and talk about how to pay yourself legally to keep your business structure and the advantages that that business structure provides intact. Also, how to legally accept payments from clients and what to do when clients want to send a payment to you personally versus your business. There are some really sticky situations out there that you're going to experience at some point. So having the knowledge to handle these situations and the protections in place is only going to help you in your business. So without further ado, my friends, let's get into today's episode. You're listening to the Legal Paige Podcast, where we chat about life and business with a legal twist. I'm Paige, attorney and photographer helping online businesses and creatives tackle their business dreams without breaking out in hives. No more legal mumbo jumbo. This podcast features simple, bite-sized advice that'll have you legally legit in no time. Are you ready? Let's get started. As a reminder, before we get into this episode, I am legally obligated to give my disclaimer. I am an attorney, but I am not your attorney. All legal information I talk about in this episode is intended for the masses and a large variety of different businesses. Please seek out another attorney in your city and home state if you need specific legal advice related to your unique business. Okay, let's get back to it. Okay, so I want to start out this episode with really saying the foundation of paying yourself. You start a business to make money. You are a for-profit business. And to do that, you do have to know how to pay yourself the profits that you receive. So I want to take you all the way back to the beginning and really talk about just giving yourself a paycheck, giving yourself a salary, whether that's an owner's draw, and then financial liability when you're using different business structures while paying yourself. So you won't be having different business structures, but dependent on the type of business structure you are, then you're probably going to need to legally pay yourself a little bit differently. So the first step for all intensive purposes and all different types of business structures is to keep your business money in a business bank account. So even though some types of business structures don't require you to keep your business profits, your income and expenses, and I call them the cha-ching moments, separate from your personal finances, if you have listened to this podcast for any amount of time or you've heard me speak at conferences or events or summits, you know that I am constantly telling people it doesn't matter if you're a sole proprietor, an LLC, or an S-Corp, you should still keep your business income and expenses separate from your personal ones. And that means you need to keep them in a different bank account, a business bank account. Keeping them apart from your personal account, one, makes it so much easier to do the accounting work for your business and file taxes at the end of the year. But it also is so much easier to pay yourself a consistent amount and to also keep track of that amount if your accounts are separate. So the first thing you need to do with your business, no matter what business structure you are, is register for a federal EIN number. That's Employer Identification Number, and that will be connected to your business bank account. Next, I want you to just open a business bank account. Usually you have to have an address and you have to have an EIN number for any financial institution to issue you a business bank account. They want to just make sure you're a legitimate business. Sometimes they also require like a registration certification from your state if you are an LLC and you're registering for a business bank account. So once you get that EIN number and you're able to open your business bank account, now we're going to touch on transferring money to your personal account to pay yourself. So as a small business owner, creative, or entrepreneur, we are really constantly investing back into our business. It's honestly how the system works, right? But it doesn't mean that you have to invest all of that business revenue back into your business. And this is really where newer business owners get stuck. Because yes, it's okay for maybe the first few months or even maybe the first year to not make a huge amount of profit, but it's kind of this like commonplace thought process that it's okay if you're in the red or if it's okay if you break even. I'm here to tell you it's really okay if you're in the black. Like, definitely make as much profit as you can and pay yourself. I want you to be a successful, profitable entrepreneur. So you can, and I would say you should pay yourself before investing so much back into your business. Of course, you need to invest some, but it's really all about the balance. So this isn't a green light here to take out all of your business revenue you make and transfer it into your personal account. Again, it's a balancing act. Each individual and each business is different, but you need to find that balance that works for you. So keep some revenue in your business account in case of emergencies or for future investments that you may not know right now at the time that you're going to make. So for example, I always say try to have a $0 amount in your bank account. In your mind, that's the $0 amount. Maybe for you as a new business owner, it's $2,500. And that's your $0 amount. So you never want to go below that because that is kind of your emergency fund or your future investment fund. And then you would transfer periodic amounts to your personal account to pay yourself for all of your hard work every time you go above and beyond that $0 amount. So if it's $2,500 and that's your $0, I oftentimes say, okay, so at the end of the month, if you have $4,000 of business profits in your bank account, all of your expenses have been paid, then that would be a good time to pay yourself $1,500 for the month. And you would transfer that amount from your business bank account to your personal account. If your small business, though, is your only source of income, and, I'm talking here and I'm just throwing out numbers, right? Like for bigger businesses, $40,000 is probably their $0 amount. For even larger small businesses, it's $100,000 is their $0 amount because they have to make payroll, they have expenses, and they want to make sure they have 3 to 6 months of an emergency fund. But for you, if you're a solopreneur and you're just starting out, we're talking about a lot more digestible numbers here, I would say, and reasonable numbers that okay, I'm probably going to invest a lot back into my business. I'm not saying you don't make $10,000 to $15,000 that month. I'm just saying a huge part of that is probably going back to purchasing better equipment for your business, learning and educating yourself, becoming a better business owner. And so you may not have, $100,000 of profit the first month of business. Okay, I digress. So back to what we were talking about here. If you're kind of doing this as a side hustle, your numbers will obviously be a little bit smaller. But if your business is your only source of income, what I want you to do is budget out your needs and your wants. That's really important here. What do you need to pay yourself every single month to ensure that your personal expenses are covered, and maybe you have a little bit of personal financial stability in terms of, savings account and retirement account, so on and so forth. And what are your personal wants? When you start your business, or honestly, whenever you're in business as an entrepreneur, I think we are better in terms of money at really seeing the needs versus wants, because we don't have a W-2 salary or, timesheet that we're submitting every month, like an amount that we know we're probably going to get every single month. Those wants and needs in the W-2 world, I think oftentimes are a little bit more convoluted, but it's a lot more clear when you're an entrepreneur because you're constantly looking at your numbers. And if your business is your only source of income, of course, you're going to want to not only pay yourself for your personal expenses, but you're going to see those needs a lot more clearly. So you need to decide how much you need to transfer into your personal bank account every month or every 2 weeks or even every week to make that happen for yourself personally. So for all intensive purposes, if you are a sole proprietor or an LLC, and I'm going to get into the differences here in a second, it doesn't matter if you pay yourself daily, weekly, bi-weekly, or monthly. I always just say, try your best to keep it consistent so that your books look more legally legitimate. However, I understand that there are situations where your business may ebb and flow. You may have a really good month, and you may be transferring a lot more into your personal bank account to pay yourself from your business account in, July versus, say, in January, if you're in like a seasonal type of region where you're performing your business services. Oftentimes, summertime is a lot better for people financially in the entrepreneurship world, and particularly the creative world in general, than the winter months. What I'm trying to say here is the amounts don't need to be the same because you could have different weeks and months of income and hours worked. We get it. You're an entrepreneur. Things are going to ebb and flow and change back and forth constantly. And you can totally write yourself a check if transferring isn't an option. But for the most part, we all live in an electronic internet world, and you should be able to link up your business account and your personal account. And you want to have what I call that transaction cha-ching moment documented from one account into another and available for review from your bookkeeper or your accountant or yourself if you're doing your own taxes and finances at the end of the year and you're reviewing your P&Ls consistently. So my bonus tip here is make sure that you're diversifying your funds into different accounts. You should, of course, have your business bank account to start with, but if you are a more mature, seasoned business owner, you should probably have a lot more than just that one account. You should have a tax account. You should have an emergency fund account. You should just have your business operating account. Go read Profit First. It's an amazing book. And then, of course, you want your primary personal accounts, and then you want your savings personal account, so on and so forth. So entrepreneurs oftentimes have like 4 to 6 bank accounts. That's very normal or more. I have way more bank accounts, but it's nice because I'm really able to keep all of them separate, and I really try to make those transactions clear from one account to the other on why I'm doing things. And it really helps you not commingle funds as much in terms of everything coming in and out of one account, and you trying to decipher, okay, which amount in this one business bank account is my emergency fund, which one is my tax fund, like am I saving, 20 to 30% of my business profits every month into a tax account. Again, go read Profit First. It's the best book to explain all of this to you. So I now want to transition to self-employed individuals and business structures, sole proprietorships versus LLCs versus S-corps. Because I know many of you who are seasoned, profitable LLCs are oftentimes looking towards, okay, I want to become an S corporation, but how does that change me paying myself as an entrepreneur? So for a sole proprietorship, of course, carries the most amount of risk because all liability falls on you. We're talking legal liability risk here. So if someone files a lawsuit against you and you're just a sole proprietorship and you're found liable, you personally will be on the hook to pay for the judgment, whatever that judgment is, because your business and your personal liability are connected. They're one and the same. And there's no separation there. The sole proprietorship is an arm and extension of yourself. So really, your sole proprietorship is connected to your Social Security number. Sole proprietorships are great, right? They are advantageous in terms of profit because if your business is booming, the profits are all considered yours. It's also really, really easy to set up. You're just deemed by default a sole proprietorship. And sole proprietorships are, I would say what the majority of businesses are until you move to the registration stage. So under a sole proprietorship, remember the profits of the business and your personal income are treated the same, by the IRS and by your state government. There's no distinction. So your income is the resulting profit after deducting all of your overhead expenses. And this you will see on like a Schedule C of your Form 1040 at the end of the year. Again, taxes, it's okay if this is all over your head in one year, out the other. You don't need to remember any of these forms. But what you do need to know is that you are taxed on that entire portion of your business profits, including tax for Social Security, Medicare and Medicaid, so on and so forth, all of your state taxes that are due if you live in a state where they derive income tax from. Remember, even though all of your profits are personal income, it's crucial that you keep your business profits in that separate business bank account. Remember what I said at the beginning. I don't care if you're a sole proprietorship. I truly, truly don't want you making the mistake of just using your personal bank account for all of your business income and expenses coming in and out. It is going to make your life so much easier at the end of the year, so you can easily pull your finances from your business account and see your numbers and be able to file that Schedule C with your personal tax return easily and legitimately at the end of the year. It's also so much easier to just pay yourself. And sole proprietorships are really what I was talking about at the beginning in terms of you have that sole proprietor business bank account that maybe $2,500 is your $0 amount in there. And you're investing back into your education, you're investing back into your gear and equipment through that business bank account, but you're also just easily transferring from your business bank account to your personal account. That is how you pay yourself. And you want to make sure that you still keep enough in there for your taxes at the end of the year. So say again here that you have $4,000 in there at the end of the month. You have $1,500 to decide what you want to do with. You kind of can say that those are like all profits there for your business. And you definitely want to take, 25% of that $1,500 and either keep it in your business operating account, or you want to transfer it to like a tax account so that you have that money to pay your taxes, whether you're paying those quarterly or annually. And then you can transfer the rest to, your personal account, and that would be your payments to yourself. You kind of have to do your own pay stub, essentially. It's so much easier when you work for someone else and they're running your pay stubs and your payroll, and they're doing all of the W-2 work and they're pulling all those numbers for you, because they're required by law to do this for every single time they run payroll. You have to pay your fair share of taxes, and the business then pays their share of taxes on the amount that they agreed to pay you. And what oftentimes gets entrepreneurs in trouble is they forget the tax portion of it. They just think all $1,500 of that profit can just be transferred into their personal account. They use that $1,500, and then you're liable for taxes at the end of the year, and you have to kind of like go find money somewhere. So just keep a tax account or boost your $0 amount in your business bank account to accommodate for that. Okay, so that's a sole proprietorship. It's really simple. You have two bank accounts, got a business one, and you've got a personal one, and they often flow back and forth quite a bit to pay yourself. An LLC, which is a limited liability company, is the most popular business entity for small business owners and entrepreneurs because it's the easiest way to form yourself while shielding you from personal liability. It provides you, as the owner of the company, with quote unquote limited liability regarding business decisions, hence the name. It's limited liability, so you could potentially still be liable for things like intentional acts as you as the owner on someone else, or, on a third party that may sue you, or damages that may incur. But you are not personally liable for any debts incurred by the LLC, and you're really, really not liable for most business-related lawsuits, unless intentionality comes into play there. But for all negligence purposes, which is the majority of business-related disputes, lawsuits, legal matters that pop up, You as a person are separate. So this is great news. And this is why everyone creates LLCs, is because for most states, they're really inexpensive to form. It's like the best form of insurance you can do for your business because you're completely separating them. If you've heard me speak before, you know about my bubble analogy where you pop the bubble and the bubble pops and separates into two bubbles. And your personal assets and liability are over on, say, the right-hand side bubble. And then your business assets and liabilities are over on the left-hand side of the bubble. And you don't want those bubbles to then touch again. And the way you do that is through really, really good finances and keeping everything separate. So having an LLC means that you take an owner's draw to pay yourself. But it's very, very, very similar to a sole proprietorship. So don't get confused here. As long as you are a single member LLC, if you are a dual member or multi-member LLC, just don't fully listen here because it is a little bit different dependent on, if you're 50-50 partners or, 30-70 partners. So just push this to the side. But for everyone who's listening, that's a single member LLC. Again, same thing applies to pay yourself. You're transferring the money from your business LLC bank account to your personal account, or you're writing a check to yourself. Don't ever pay yourself in cash. I really want that transaction to be documented. And because of how easily accessible electronic transfers are from banks to banks or from accounts to accounts, if you're using the same bank for your business and your personal finances, then transfer that money. You would make an owner's draw. So instead of just transferring the amount as a sole proprietor, it's now just deemed an owner's draw. And you can do that anytime for any amount. Again, better to have it consistent. I would say monthly or biweekly is best because you're looking at your numbers a little bit more consistently. You're seeing how things change. Hopefully you're running P&Ls for yourself. You can do this on all kinds of different online platforms such as QuickBooks, and they will run P&Ls for you, which is great. You can see things. So having the same amount transferred biweekly or monthly is good for budgeting purposes, but also for accounting purposes. And then again, remember, you should also be setting aside money every single month for taxes, emergency funds, and, future investments and things that may come up. So you can also pay yourself through your LLC with a salary each year. This route usually makes sense when there's multiple members in the LLC and or if the LLC operating agreement requires LLCs, all of the members to be paid a salary. However, if you're paying a salary, you probably just want to consider filing as an S corporation. I'm going to get to that in a second. For most business owners that are LLCs, you are really just paying yourself through that one-time transaction. And, you try to keep it as consistent as possible, but sometimes you're transferring, because you have something you need to pay personally, and you need to take that owner's draw right then and there that morning, and then you get back on a consistent schedule. The main thing that I care about is that it is documented and it's flowing, and you can say, okay, that was an owner's draw. You can write a little memo to yourself and it'll show up in your finances every year. So S corporations. S corporations are actually not a type of business formation or entity. They're just a tax designation. So lots of people say, well, I'm just an S corp. But you're an S corp that's probably an LLC registered through your state. For most creative entrepreneurs, you first file as an LLC and then you elect to designate for tax purposes as an S corporation. Because the legal liability part, the LLC part, that bubble that we just discussed, that is legal. That is a legal bubble and legal protection that surrounds your business. S corps are just a tax bubble. It's just a little tax incentive for you. So remember, you got to keep both. And I am your, friendly online attorney telling everyone for general purposes here that you want to make sure you keep that legal bubble through your state intact as well. So S corps, you're not like registering, you're just filing through the IRS to file as an S Corp. The biggest thing financially is when you become an S corporation, you do have to put yourself on payroll and pay yourself a quote unquote reasonable salary. So you incur the additional expenses of someone to run payroll, or you got to get on a payroll service or like online payroll platform service. And then you do have to file now 2 tax returns, one for your S Corp and one for your personal taxes. It's not difficult, but it is a tiny bit more cumbersome. And again, you're technically putting yourself on as a W-2 employee for your business. Your quote unquote reasonable salary will be a business expense. So you will only pay self-employment taxes, Social Security and Medicare on your reasonable salary that you pay yourself. Maybe you pay yourself $2,500 a month, and that's your salary, and that's what you run through payroll. Your business will pay its share of taxes on that $2,500, and then you, because it's a W-2 pay stub, you will pay your share of taxes on that. But remember, you're only going to be paying self-employment taxes on that reasonable salary because you're self-employed through your business. But all of the additional business profits. So say you're paying yourself, right? Let's go to $2,000. You're paying yourself $2,000 a month, 12 months, $24,000. That's your salary. That doesn't really seem actually reasonable right now. So let's bump it up. Let's bump it up to at least $5,000. You have a $60,000 salary. That seems a little more reasonable in today's day and age with inflation. So that would be a reasonable salary. Again, that's going to be different dependent on where you live and the cost of living, so on and so forth. But if you have $60,000 as your reasonable salary, but at the end of the year, your business itself, the total amount above and beyond that, that's your business profits that's sitting in your business bank account, is another, say, $40,000. Woohoo! You're like, you feel like you're hitting close to 6 figures and over 6 figures of business profits, right? Because you've put yourself on salary. You're an S corporation now, so you're paying yourself some of those profits every single month through, a W-2 payroll. And you're also incurring some profits on top of that. You will pay self-employment taxes, of course, on that $60,000 that I just discussed. That is coming through your paychecks through your business. But the extra $40,000, you don't have to pay self-employment taxes on. You do have to pay, other state and federal income taxes, but you save a substantial amount of money each year in tax liability just for that self-employment tax purpose, because it's oftentimes like over 15%. You won't be paying that 15% on the $40,000. So you do save sometimes thousands of dollars when you become an S corporation. So this is why S corporations are desirable for small businesses, especially if you have a really, really low payroll amount, like you're you're a single owner, you have no partners there. Maybe you're just contracting out work, so you just have independent contractors, and it's you yourself that you're paying on payroll. That's fine. And sometimes people even wait till the end of the year to give themselves that one paycheck. So you're just like, you're constantly maybe making, and then you can have owner's draws on top of that. I didn't mention that. So okay, let's go back. Sorry about that. So say you have, $60,000 payroll. That's what you're paying yourself. That's your salary every year. Maybe you are taking that quarterly, okay? So you're paying yourself $15,000 every quarter, or you're trying to, right? Or you're paying yourself $30,000 every half a year, and you're running that through your, taxes and payroll service. But maybe you have a really, really good quarter, and you're profiting you're profiting, say, like $20,000 to $50,000 just that quarter. You can take an additional owner's draw, and those owner's draws, because you've already paid yourself the self-employment taxes through your payroll and through your reasonable salary, you won't have to pay self-employment taxes on owner's draw. So maybe instead of the $60K, $40K analysis that I was discussing, maybe you're making an additional $20K. on top of that $40K of profits. And maybe over time, you're taking $2,000, $3,000, $4,000 out of your business bank account just for that additional $20,000 over the course of the year, right? That is just called an owner's draw. It's on top of your salary that you're paying yourself. It's still a transaction that needs to be documented from your business account to your personal account, but it doesn't have to be run through a payroll service. It's just an owner's draw. And you will see this on P&Ls all the time with S corporations, especially with solo-owned LLCs that file as S corporations. Hopefully that makes sense. I have lots and lots of other resources on S corporations and how they work. I have blogs on it. I have podcasts on it. So go down that rabbit hole of S corporations to your heart's content if you want to know more. The last thing I want to touch on here is, how do clients pay you? So now that you know how to pay yourself through your business and make sure that you're documenting that transaction, whether that's, every so often or hopefully on a more consistent basis, I want to briefly bring up that it's really important that your clients pay you the right way before you start transferring money to your personal account. What happens if your clients write a check to you personally and not your LLC? Can you deposit it? The answer is yes, because hopefully you are the owner of the LLC and your business can accept checks written to you in your personal name. If not, with that being said, there might be an exception to this rule where you are cashing that check personally, but I want you to, again, move that amount from your personal account back into your business bank account. It kind of looks like a capital contribution, like an owner's capital contribution to your business account. But if you're doing your own finances, you can memo document that this was a payment from a client and you would put it on your income up at the top of your P&L versus owner's capital contribution section of your P&L, or tell your bookkeeper to be able to do this for you. So just request that clients make checks out to your LLC because it really, really helps with accounting purposes. They don't have to put LLC in the top of your check. They don't have to right? They can just write out your business name, but writing things to you personally, it becomes a little bit more work. I just want you to keep a clean record of the money going in and out of your business account. If your clients are paying you in cash, please, please, please put all of that cash into your business bank account and then make the transfer to your personal account to pay yourself. Don't take an extra $400 of that cash that they gave you and put it into your personal account and say you're only making, $600 of that $1,000 for income purposes for your business. Like, these types of things happen all the time, but it will catch up to you if you get audited. And more small business owners are getting audited nowadays. So just keep a clean record. For legal purposes, this is the best thing that you can do. I always tell people, if you get audited, you're not going to hire an accountant to help you with the auditing. I mean, you're probably going to help them run your books and look at tax laws and, for all intensive accounting needs. But when you get audited, you actually hire a tax attorney to help you legally fight the audit. Or if, now you're in a lawsuit with the IRS, you're going to hire a lawyer. You're not going to hire an accountant. Just remember that. Okay, so I feel like we've gotten to the bottom of paying yourself as a business owner. Let me recap on why this episode is important and what you need to take away for your business going forward. I want you to walk away with, how you're accepting payments from your clients in the first place. Make sure that you're accepting them through your business versus you personally. And we need to really stop trying to skirt around things as business owners and making a little bit more money personally. Like, do things by the books. I promise you it's going to save you in the end and you're going to sleep better at night. So once you receive that legitimate payment from your clients, whether that's through, a card payment or a check payment or even cash, you want to keep your business legal entity in place. And I want you to do the following. Keep your business assets and personal assets separate. Also, for fraud protection, if you listen to previous episodes, you know what I'm talking about. further separate your accounts for protections in your business. That means multiple different bank accounts, not just one. And then finally, once you have all your numbers and at the end of quarters or at the end of months, you're seeing, okay, this is how much profit I am making and all of your expenses are taken care of after you've saved for your taxes and you've saved for future investments and your emergency fund. Pay yourself, just like you would if you were an employee for a different business. Remember, it is okay to pay yourself. You are a for-profit business, and I want you to make money, and I want you to be secure financially in your personal life. If you've listened to this episode and you are just a sole proprietor and you're ready to form an LLC, I highly, highly recommend purchasing one of our DIY LLC registration guides. We have one for each and every state, and the guide takes you step by step through the process of registering your LLC all on your own. They're very inexpensive. It's cheaper than hiring someone online that you have no idea who Bob is that's going to help you do this. And the guide includes all necessary links for your state, important definitions of terms you'll see online when you're registering for your LLC, additional information related to dues, whether that's annual or biannual LLC dues that you have to pay your state, and information to help you find any necessary licenses or permits in your state and or local county. So to find your LLC registration guide for your state and purchase today, you can just head to thelegalpaige.com. That's thelegalpaige.com and search at the top for LLC guide, and then it'll take you there. It's also in the drop-down menu of our main menu at the top of our website. So finally, if you want more helpful business advice, always, always, always be sure to join the Legal Paige Facebook community, where thousands of entrepreneurs just like you are getting real-time answers about running a professionally and legally legit business. Thanks again for tuning in to today's episode, and I'll catch you in the next one.
Thanks so much for listening to this episode of the Legal Paige Podcast. See, I told you being legally legit isn't so scary. Be sure to visit thelegalpaige.com for all show notes. And it would be super awesome if you could head over to iTunes and leave a review. Last but not least, don't forget to join my free Facebook group for unlimited legal and biz Q&A. Chat soon, Legal Pagers.